At the time, I figured investors would quickly snap up this one. Oh, come on, they'll buy the dip. In fact, I don't think it even should have been down. But it's now been 2 weeks later, and the stock of Disney still hasn't recovered. So I'm going to break this one down for you. Full disclosure, we've owned Disney for the Charitable Trust since 2018, and during that time, the stock's gone from a huge winner to being a frustrating holding. But I've been willing to stick with it, especially since Bob Iger came back as CEO near the end of 2022. Sure, I threw my support behind Nelson Peltz, the famous activist investor, when he made a run at Disney last spring to get a board seat. I still think the company could have benefited from his advice. Long story short, though, I like Disney's entertainment portfolio and its underappreciated parks business, which is why we've stuck with the stock through years of underperformance. I think we are going to win big on this one, and I am patient. Now, after the proxy fight, this thing started showing signs of life, climbing from 83 and change in August to 118 at the highs last year, largely thanks to a strong quarter in November. By the time we got the next earnings report a couple weeks ago, the stock had pulled back to 113, but it was still looking pretty good. And then the company reported the stock sold off. I think it's crazy. Disney reported a modest revenue beat paired with a major 31-cent earnings trouncing off a $1.45 basis. And that's thanks to very successful cost cuts. Hey, those matter. They still count. The key theme of the quarter was impressive profitability, as all three of Disney's segments beat operating margin expectations. Entertainment, the most important division, had a slight revenue miss, easily explained, and the cost cuts translated into much better than expected operating income.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.